All right, let's dive right into Alcoa's third quarter 2025 earnings. The numbers are out, the management team has had their say, and, well, the market has already cast its vote.
And wow, that vote came in fast and hard. In after-hours trading, right after the numbers dropped, the stock took a hit, down over 4%. So, what's going on here? Let's get into it.
The whole story really starts right here. It was just a clear-cut miss on both the top and bottom lines. The street was looking for a small adjusted profit, about 2 cents a share, on revenue of $3.13 billion. What they got instead was an adjusted loss of 2 cents per share on revenue that came in at just $3 billion. It's that gap right there between what was expected and what was delivered that really sparked the negative reaction.
Okay, so here's our game plan for this breakdown. We're going to start with that headline miss. Then we'll peel back the layers and go behind the numbers, because there's a lot going on there. After that, we'll zoom out and look at management's big picture strategy, weigh the headwinds against the tailwinds, and then we'll wrap it all up with our final verdict, the next call on Alcoa. So first up, let's just quickly unpack that initial reaction from the market. The simple version, the company missed expectations, and that triggered a sell-off on some pretty heavy trading volume. Plain and simple.
And when you glance at the key financials, you can really see the pressure. Revenue dipped 1% from last quarter, but what's more telling is the adjusted EBITDA, which, is a really good way to look at a company's operating cash flow. That metric fell a whopping 14%. On top of that, they actually burned through $66 million in cash. So yeah, these numbers definitely paint the picture of a tough quarter.
But here's where it gets interesting. Because those headline numbers, they absolutely do not tell the whole story. This quarter was just packed with these huge one-time items. And to really get a handle on how the core business is doing, you have to connect the dots between the official GAAP profit and that adjusted loss everyone's talking about.
And this table right here, it lays it all out perfectly. So Alcoa officially reported a GAAP profit of 88 cents a share. You see it right there at the top. But look at these massive moving parts. They had a huge gain, $786 million, from selling off a joint venture stake. Another $267 million came from a mark-to-market gain. But, and this is a big but, they also took an almost $900 million charge for shutting down their Kwinana refinery. So when you strip out all of these special one-off items, you land right back at that adjusted loss of 2 cents. A totally different picture.
So with that adjusted loss as the backdrop, what did management want to talk about on the earnings call? Operational stability. And you know what? They made a pretty decent case. Production for both alumina and aluminum was actually up. They even set production records at 5 of their smelters this year. And they cleaned up the balance sheet a bit by paying off a final loan.
All right, so let's zoom out from all that quarterly noise for a second and look at the bigger picture. Management is playing a long game here, and they have a very clear strategic playbook that's all about fine-tuning their assets and really de-risking the entire business for the future. It really boils down to a 3-part plan. First, portfolio optimization. That means getting rid of assets that don't quite fit, like that Maaden stake, and closing down older, less efficient facilities like Kwinana. Second, securing long-term, cheap energy, which is literally the lifeblood of this business. And third, they're looking to create new value by going after strategic materials like gallium.
And you don't have to take my word for it. The CEO himself, William Aplinger, called their new long-term energy deal in Massena, New York, a big deal. And it is. Locking in competitive power is absolutely essential for keeping U.S. aluminum production alive, and this deal gives them the confidence to pump $60 million into modernizing that plant.
Now, that third part of the strategy, gallium, is fascinating. This isn't just about mining. We're talking geopolitics here. Gallium is a critical ingredient for things like advanced computer chips and defense technology. So this project, which has backing from the US, Australian, and Japanese governments, is a really clear move to build a vital supply chain that isn't controlled by China.
Okay, so that's the long-term plan. But what about right now? What does the guidance for the fourth quarter tell us about where things are heading in the immediate future?
Well, their forecast is a classic tug-of-war. On one side of the rope, you have their alumina business, the raw material. They're expecting a nice tailwind there, with profits improving by about $80 million. But pulling hard in the other direction is their finished aluminum business. They're facing some serious headwinds, including a $50 million jump in tariff costs. The bottom line? A lot of that big gain in alumina is basically going to get canceled out.
And this chart, wow, this chart tells you everything you need to know about the pressure management is under right now. Over the last year, the broader metals and mining sector has been on an absolute tear, up an incredible 47%. Alcoa stock? It's down 15%.
Closing that massive performance gap is the #1 challenge, and it's why the market is watching so closely to see if this big strategic plan can actually start delivering results.
Okay, that brings us to the final section. It's time to put all the pieces together. It's time for the next call, where we give you our forward-looking thesis and our official rating on Alcoa.
So after digging through all of this, the good, the bad, and the messy, the question you're probably asking is pretty simple. What do you do with the stock now? Is it a buy, a sell, or a hold?
All right, the moment of truth. We are initiating our coverage of Alcoa with a market perform rating. Now, let me walk you through exactly why we landed there.
Look, our thinking here is pretty straightforward. We absolutely see that management is making the right long-term strategic moves. They're cleaning up the portfolio. They're locking in good energy contracts. That's all positive. But, and it's a big but, in the short term, you just can't ignore the headwinds from those tariffs and the general economic uncertainty. Those factors are going to put a cap on any major upside for now. The key things to watch are whether they can hit their Q4 numbers and how the big smelter restart in Spain goes. Until we see a really clear positive turning point, we expect Alcoa's stock to pretty much just move in line with the rest of the sector.
And a reminder, this is not financial advice.